So for those of you who don't know Skyharbour, we're a high-grade uranium exploration and early-stage development company. 6 projects that we've acquired over the last 5.5, 6 years. I'd like to think that we've done a good job being aggressive, being opportunistic in an otherwise pretty tough uranium market. I'll talk a little bit more about that. I will be on a panel at 4 o'clock discussing that with Marin and Amir. But we've done a good job being opportunistic. We acquired these 6 projects for really pennies on the dollar, 2 of which have deposits, one of which we're going to be drilling here in the next several months. We've been quite aggressive and active with our drilling and exploration at that project. What's exciting about this project, again, our flagship Moore Lake project, is the new technique we've used, geophysical technique, that's identified new targets in the underlying basement rock. And so that's something to keep an eye out on our next upcoming drill program, where we're going in and we're looking for these higher grade, deeper basement hosted zones, similar to what NextGen, what Fission, what the Griffin deposit at the Wheeler project, what they found there. And this is one of the first programs we're going to be going after those zones. So I'll talk a little bit more about that. I'll get right into the presentation here. So just some investment highlights. People, timing, and projects. I like to highlight the people behind the company, not just the management and technical team, but some of the larger shareholders and strategic partners that we have. We do have Denison Mines as our largest strategic shareholder. The gentleman who runs Denison is a gentleman named Dave Cates. He's on our board. So a very close working relationship with a New York listed larger uranium company. We also have a company called Orano as a strategic partner at the project level. So Orano is France's largest nuclear and uranium mining company, previously known as Areva. I'll talk a little bit more about that partnership. Timing with the uranium market. This is obviously a hot topic right now. I really do think the value proposition that most of these uranium companies, albeit just a few of us that are left, I think the value proposition right now is stronger than it has ever been. And you can see what I've been doing with my own money. I bought hundreds of thousands of more shares in the market over the last month and a half, 2 months, post 232. I just think after this decision and the ongoing working group, we see the valuations that have pulled back, the sell-off, resulting sell-off from it. I think it's a scenario of throwing the baby out with the bathwater. A lot of non-U.S. companies that have been hit hard, we're now trading at a $12 million valuation. We have partner companies spending over $12 million on 2 of our non-core projects. And then projects, last but not least, the assets. I'll talk a little bit more about that, what the plans we have coming up. We have 3 programs coming up, 2 of which are funded by partner companies. Just a quick highlight on the people. Myself and Jim Pettit out of Vancouver. I started the company about 6 years ago. It was just a shell at the time. We went in, we started acquiring these projects. I teamed up with my head geologist, a gentleman named Rick Kazmersky, or Radioactive Rick, as he's well known in Saskatoon. He's found a lot of uranium in his day. He was the he was exploration manager at Cameco for a number of years before starting his own company, JNR, which he ultimately sold to Denison Mines. So that's come full circle here, where Denison is now our largest shareholder and a very close working relationship with them. You'll see here Dave Cates, as I mentioned earlier, President and CEO of Denison Mines, and Paul Matizik, who's a well-known company builder, just recently coming off Lithium X. His biggest win, though, was a uranium company, Energy Metals, which he sold to Uranium One for $1.8 billion in 2007. Going over to the share structure, 64 million shares out. As I mentioned, post 232, like most of our peers, we've pulled back at currently a $12 million market cap. You'll see some of the notable and strategic shareholders there. So getting into the uranium market, this is, as I said, this is a topic that I seem to discuss almost more than I discuss the company, but I think it is important. Where we're at right now, you look here, supply-demand. I think this is one of the most compelling supply-demand scenarios of any metal out there. We've gone from over almost 170 million pounds of primary mine supply down to about 135 million, and that's mines that have been shut down, curtailment, McArthur River being the biggest one. I think you'll continue to see that trend as long as we're in this low price environment, the current spot price being at 24, just under $25 a pound. The demand side continues to grow. I was just recently at the WNA, the World Nuclear Association Symposium in London, and for the first time since Fukushima, when they came out with their demand projections, we saw very robust demand projections, both in the upper case, the mid case, but for the first time ever, even in a worst case scenario with nuclear, we see increasing demand demand for uranium and nuclear energy over the next 20 years. The supply side, however, is what I want to draw your attention to. So we've seen major supply cuts, sequestration. We're seeing mines simply depleting resources and reserves. So we're going to continue to see that trend. We now have a major supply deficit to the tune of about 55, 60 million pounds, and that has to come from somewhere. We've been eating away at these secondary supplies, but what we're starting to see now is the spot market tighten up. One of the biggest upcoming catalysts for this market in the next few months is Cameco. Cameco, because they've shut down McArthur River, has to step in and buy upwards of 10 million pounds in the market. They have to get that from somewhere. If they're unable to source this from other secondary supplies, they'll be forced to step into the spot market. That there alone could drive the price through the $30 mark, which is a big technical resistance level that we've seen over the last few years. So we'll go quickly here. So this just shows this graphically. You can see these recent reduced, suspended, and sequestered millions and millions of pounds, almost 60 million pounds. Cameco buying in the spot market. More recently, we've heard rumors of EDF drawing down their inventories to a level where they're going to have to step into the spot market. But I'll point out here, Yellowcake. So a year ago, we saw a couple of new funds come into the market, Yellowcake being one out of London. They bought 8.5 million pounds directly from Kazatomprom. They have an option to buy $100 million worth of uranium each year for the next 8 years. So you're seeing these new financial buyers come to the market, much like we saw in the early mid-2000s before we saw that uranium price move. So on to the last part of that acronym, projects. The Athabasca Basin, as I mentioned, all of our projects are located in the Athabasca Basin, the highest grade depository of uranium in the world. This is why exploration is still prevalent in the basin. It's the only place you want to be right now if you're looking for new deposits. You'll see here the equivalent grade, 1% U3O8, equivalent to 22 pounds or 20 grams per ton of gold, 1,400 grams per ton of silver. So this just shows you, even in a depressed uranium market as we have been in, if you make a high-grade discovery, you issue positive drill results, high-grade drill results, you'll still see wealth creation, you'll see value creation in the market. We've seen that with NextGen, we've seen that with Fission, and even more recently, just this summer, we saw a peer company of ours, ISO Energy, announce high-grade drill results. In the backdrop of this 232 sell-off, they hit 52-week highs. So us coming out with high-grade drill results, even in a tough market, we can see significant share price appreciation. This bottom diagram here, I just want to point this out because this is very, very relevant to what we're doing right now. So you'll see here the two types of uranium deposits in the basin. You'll have the uranium either pooled, deposited in the sandstone, and you'll see that big blue halo. That means it's typically easier to find. You have this big alteration halo. You can go, you can drill, you can find it and hone in on the high-grade uranium. The basement-hosted mineralization, which is typically the highest grade uranium found in the basin, that's NextGen, that's Fission, it's Griffin Deposit, Rough Rider. You can see there, you don't have that big alteration halo. It's very concentrated in these structures. Well, just recently, we've been using drone surveys to go in and properly identify and refine these targets. So in our last drill program, our last hole in that program, we hit multi% over a few meters, good high-grade mineralization over skinny width. We think we just tapped into something much larger, much higher grade at depth. We did the geophysics. We flew this drone survey, and lo and behold, we've identified a big cross-cutting structure right below where we intersected that high-grade mineralization. So that is arguably the highest priority drill target we've ever had on this project that we're going to be drilling first in this upcoming drill program. So I'll just finish off going through the projects here. As I mentioned, we're going to be drilling here at Moore Lake. That's our flagship project, 2,500 meters planned for next winter starting in January. Again, testing what we consider to be our highest priority drill target thus far on the project in the underlying basement rocks. We have a couple of other regional targets on the project that we're going to do a couple of exploratory holes on. Outside of the high-grade discovery potential at Moore Lake, we do what's called prospect generation. So we bring in partner companies that will fund exploration, pay us some cash and stock as well. We've done two deals, one with France's largest uranium mining company, Orano. They have to spend $8 million to earn up to 70% of our Preston project. That's over by Fission and NextGen. And then also a company called Azincourt. They've just recently announced plans for a 2,500 meter drill program at our East Preston project. So both of these upcoming exploration programs funded by partner companies, they're good complements to what we're doing, our main focus being at our flagship. It also brings in some cash so that when we do raise money, we don't have to raise as much. We can use that to fund exploration at our highest priority targets at our flagship project. So just to wrap up here, people, timing, and projects. We have a team, a management and technical team that have focused expertise on high-grade discovery and exploration in the Athabasca Basin, 2 strategic partners in Denison Mines and Orano. Timing with the uranium market, I really think that I'll just go to the very end here. The timing with the uranium market, with Cameco having to step into the spot market, with other utilities having to come in, I think some clarity now for this 232. We still have the working group, but with 232 out of the way, that's going to pave the path for U.S. nuclear utilities, the largest consumer of uranium globally, to come back into the market. So I think timing right now, we'll see the spot price move up. And then last but not least, the project. High-grade discovery potential at our flagship, and then prospect generation at our other projects. Thank you.